Hey everybody, Jared Jones. If you're watching real estate, you know it's a inferno. It's on fire. But there's a trend right now that we're watching in the Central Florida housing market that I'm going to share with you today. In fact, I'm going to go through 3 of my favorite indicators to watch to get a pulse of what's going on in Central Florida real estate. We're getting started right now. Hey there, Jared Jones. Today I'm going to walk you through a couple graphs. I actually subscribe to some data that actually aggregates the real estate market here in the Central Florida MLS, and I'm able to actually kind of delve into specific counties and watch what is going on in terms of market trends. Now, I'm going to pull up a quick dashboard for you guys of some specific market indicators that I like to keep a close eye on so that you can get an idea of what's going on in the market, and then we're going to talk about what's going on in the larger sense. Can it continue? Nice. What will drive it down? And what should you be paying attention to for your own investments or for your own plans to enter the market, your own plans to relocate? Let's take a quick look. So on my screen here, a couple things you're going to notice. I'm looking at the Orlando marketplace, but I'm looking particularly at Lake and Orange County. Only those 2 marketplaces, those 2 counties are where I'm watching. And the graph that you're going to see right here is what's called a 5-year overlay graph. So that means I've got 5 years. You got 2020, you can see it right here. 2020's green, 2019's orange. You have 18's purple, 17's like lime green. And these graphs are overlaying across a couple different market indicators that I pay close attention to. So I'm just gonna scan through those really fast so that you can see. Some of them I'm gonna switch graphs. I'm gonna show you some kind of cool insights on what's going on with the marketplace. But check this out. Average day on market. Why is the black lines this current year? It's the lowest average time frame to sell a house on record starting at the beginning of the year. So out of the past 5 years, you can see right now that the marketplace is hotter than it has been at any point in 5 years. In fact, let me see if I can't zoom out and give you like a 12-year start. Let's see if I can see something a little bit different. Oh man, so I can't really show you an overlay on this chart. So what you can see is back here in May 2011, you had a massive spike in how long it took to sell a house. So early in 2011 is when Orlando got really down. And then after that, the market recovery inspired lower down market times. You could see it kind of just drop, and it's never stopped. Look at that chart. You look at a long 12-year view, we are now at a point where it is rapidly the hottest point of any time that we've seen in a 5-year period, but much less a 12-year period. Now, you can see that we bottomed out right here. You see this dip? That's November of last year. This green line dropping to record crisis low inventory levels was right there. Obviously spurred on by what? Low interest rates. Easy money. People commuting out of northern states, relocating, not commuting, but moving here from other areas. Look at this, average sold to asking price ratio. The 2021 graph rather, is record setting right here. So you have the largest amount of sellers are getting closest to their asking price. It's the most at any point in the last 5 years, as you can see from the start of this year. Okay, not to be too surprising there. You can see here we had a raging time frame in April. So like as April came back, this really kind of represents sales that were going on in the spring before COVID lockdown happened. There was a lot of inventory going under contract right as the market was being locked down, and then it dropped. This in May, we see the green line drops out here in the bottom. This was actually what took place when there was 15 days to flatten the curve. Okay, so now it obviously just continuously sprung back over time. We had record, sellers are getting record numbers on their asking prices going into the end of the year. Same thing now. And the question becomes, how long can it last? You know what I'm saying? There's always a correlation between rising interest rates and what people can get for their house. That is one of the #1 indicators that I will point out to you, you have to pay attention to. Usually, historically, if an interest rate price changes 1%, then it affects the market 10%. Repeat that. A 1% change in interest rate a lot of times has a market standard correlation of a 10% price decrease. However, However, in this market right now, you have no supply. So interest rates can keep creeping up. Demand is incredibly high. It's not changing. And supply chain is still constrained. So that means that the indicators creating the hot market is really not being mitigated by the climbing interest rate yet. Now, the interest rates only climb by about 0.5%. So, we'll have to see how that happens. I'll show you some more content on that here in a minute. But check this out, units sold. This blows my mind, okay? This means that in November and December, to get these line production, the units sold here in January and February is November and December production. You guys follow on that? Home went under contract at the end of last year to produce this unit sold graph, which is not a surprise. Everything in sight at the end of last year was being bought up to the point where we're starting out at a higher number, which to me, I did not expect to see this result because why? There's no inventory. You expect with no inventory that you would see a lower volume of sales. Now, I will be interested to see if we can hang on to March and April riding over top of the past 5 years. Because in the face of no inventory, where does it come from? Does that make sense? You don't have it. You already have, we have 1,500 sales, which again, I would imagine that even while you're seeing a small uptick, I mean, this is a small uptick over prior years. You can see really all the sales here in January were bunched up around 1,300, 11 to 1,300 range. So it's not like massively bumped up in terms of we're not selling way more homes than we have in the past. But obviously the marketplace is buying anything. Even our ugly houses are selling. If your house is a pig, you can put lipstick on it now, sell it for top dollar, folks. It's gonna fly. Check this out. No offense to you guys that own a pig. Anyways, average price of homes sold. This is crazy. Now, this is one of the last graphs I'm gonna show you. This one blew my mind because look at the uptick in the pricing. This is crazy. So if you can see this, I'm gonna zoom in. Look at this, 366,848. Look at last year, 319. That is sketchy, folks. Look at that, 392 over a 333 last year. That is crazy. That is crazy, okay? Can we say house value is outpacing income and wages? That's a good thing, right? If it does that? Okay, anyways, I'll leave that with you guys. But look at this. Let me show you this on a graph. So this looks cool on a year-over-year graph, but watch this on a 12-year graph. So here we are, back to it. Check this out. So this, a second ago, I showed you the trend on a overlapping chart. This is a trend on just a direct 5-year straight line. Look at the end. Look at this. It's like flat, 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 lift off. This is like Elon Musk. This is like SpaceX market right now, guys. Check this out. Now, it's not just, here's the thing. Everybody's like, what's gonna happen with the market? Is this a bubble? Well, most people don't believe that it is, okay? So if you go around to most realtors, if you read the sentiment indexes that Fannie Mae just put out, most people are like, everything is great, okay? But here's some interesting things I want you guys to see, okay? This doesn't mean anything. I just want you to see this. Look at this, chart of New Zealand. Chart of New Zealand, bubble brewing, annual house price inflation. Interesting thing about New Zealand, which I'm gonna talk this in detail on another podcast that I want you guys to follow. You're gonna see this within a week. You're gonna see detail about these topics. New Zealand government tackles property speculators with new rules, okay? New Zealand is actually getting involved in controlling who can buy real estate. Basically like, oh, I'm an investor. Okay, well, you can't buy one. Oh, well, you can buy one, but we're gonna wait. You're not gonna get any tax benefits that you usually have by law because we wanna make sure that you just aren't in the market. So New Zealand is actually gonna put guards, like fake the marketplace because there's no supply and values are shooting off the charts. Check this out. This right here, Canada. Look at this graph. Canada is also sponsored by the Elon Musk SpaceX administration. Look at this. Right off the charts. Canada's housing market. It's crazy. The guy who wrote this is an economist. Economist Robert 𝐕𝐴𝐚𝐴 writes in this morning charts, it's not fully apparent to all parties that the Canadian housing market is boiling. If not, this picture will convey the message. He's like, it's off the charts. Listen to this. In Canada, that is the 1 month change. 1 month of change is faster than 3 months of change. The 3 months of change was faster than previous 6 months of change. 6 months is faster than a year. And he says, in all cases but the 12 month, and it won't be long before it happens, price growth has accelerated through the rates seen in 2017. So now what is going on? Okay, you've got homeboy Jerome Powell, our buddy Jerome Powell, our chairman, Fed chairman, last month said the current state of the housing market is downright unsustainable and the housing market is likely to calm down in the near term. But as for now, home flippers, particularly in the areas where pandemic areas where people from urban areas are leaving the urban areas, they're going to other places. Flippers came in and they're trying to buy. Okay, flippers and builders, they're not without pressure. And in February, a stark update, a stark indicator, again, we're going to talk about on a separate podcast in detail. Last month, builder permitting, that's the production of new supply, plummeted. That's interesting. So last month, interest rates uptick, you got crude oil, you got lumber, all things that you need to build houses is skyrocketing in inflation. And so at the same time, you've got the outlook of what these central planners are doing is to really kind of cool the market. Okay, and so the thing that troubles me the most, and it's something that I want to kind of share with you, and I encourage you, watch the full discussion that I'm going to have with one of my partners on this coming up. Me and Josue are going to go into detail on what is happening. How fragile is the market right now? How strong is it? What are the dangers and what are some of the warning signs we need to look at? One of the things that really concerns me is the fact that globally, the market's crazy. Globally, it's not just unique to one spot, which means there's some interesting central finance governance that's going on that's impacting this. Okay, it always has. But what's happening is monetary policy, according to the Fed themselves, have repeatedly said that we are involved in inflating things. So, as a result, prices are going through the roof. Supply chains are diminished, not just real estate supply, but toilet paper, lumber, toilet paper I think is back in stock, lumber, crude oil, list goes on. Car parts, all this. So we're going to talk in detail on that next podcast on some major indicators that are coming up that are really going to drive the market forward. My ultimate concern is I think there's people with great intentions that love to engineer, if you will, economics, because we don't run a free market economy anymore. Okay, we run a centrally managed. This is all evidence of that. And so you have to watch what the central planners do. The people that control things like the interest rate policy, governance of policy over how renting is done, how evictions are managed, all that stuff is under the use of a pandemic is being controlled and managed by people. And so all that stuff has an outpouring effect on the economy. And so we're going to look at some really interesting things that are going to go on in the upcoming near future. Check that podcast out and we'll delve into that deeper. Let me know if there's other areas or there's other counties that you really feel like I should include. I use the major metropolitan areas for Central Florida because I believe that would probably represent a great cross-section of all the areas. But continue in the comments. Number one, do you think interest rates are going to continue to climb? Curious what your thoughts are on that. Number two, do you feel that there's going to be a flood of inventory in the next 8 months? Do you feel there's going to be a flood of inventory between now and the end of the year? What is your take on that? And then what do you think is going to happen with mandates, moratoriums, things of that nature that's also controlling the market? We'll see you on the next video. Talk to you real soon. Buying or selling a home in Central Florida is expensive. The Jones Group leverages the latest technology and passes the savings on to you. List your home for just 1%. Buying a home, get $7,000 cash rebate before close. Make one call, that's all. Better service, lower fees.